Hello, everybody. It's been an interesting week, and I've never, ever in my life had so many questions regarding tariffs. So we're going to dig into tariffs today, what it means for markets and Bitcoin and crypto. We'll also share some history as well, which is very exciting. We'll look in depth at Bitcoin seasonality because the seasons mean a lot, and they share a very good pattern for what could happen in the month of Feb 2025. We'll dig into that as well. What else? A ton of other stuff. M2 money supply, bonkers. IBIT buying boatloads, SPR adoption race. We'll look at drainage from different cryptos to different ones, AI battles, and how this time is different. Thank you as well. Dirk Diggler, good to see you. TND Tesla, Sean Donnelly, and the whole gang for being here. Appreciate you all. And B-Man, good chatting with you earlier today, by the way, in our Patreon community, of course. No, there's no communications, by the way, just to remind everybody, between me and anybody one-on-one, always in public. And Mr. Mike, long-term holder, thank you so much for coming. Let's get into the story because it's a tricky one today, but it's important. And of course, just a guy on the internet, not financial advice. Thank you to everybody on Patreon too. Let's first of all look at the Bitcoin black hole. It's been quite an astounding week and a very special month, which just closed yesterday. We'll talk a lot about the monthly close. Moto, thank you for coming too. But IBIT had another very strong day, north of $300 million. They are the red here, and they are the ones buying up all the Bitcoin. There's no ifs, ands, or buts. BlackRock is a machine. And GBTC, as you can see in that light green, has stopped bleeding pretty much, with a couple of exceptions. Now, when we look at the money flow, it is bang on trend on that power law curve of purple or pink or whatever color that is. I'm not even sure. But the smiley face is really tilting up because now we are in this crazy accumulation zone. Even though the number of Bitcoin purchased since day 210 is not as high as in the past, that's because price is north of $100,000 Bitcoin, but the money flowing in is higher than ever before, which is extremely good to see. I was afraid maybe this thing would peter out in 2025. It's not the case by any stretch, and that's important for seasonality too. And 53,000 Bitcoin. Julian, thank you so much. 53,000 Bitcoin were purchased since January 3rd, and over 4,000 or 5,141 this week, which is crazy. But you can see the dollar doesn't go as far as it used to, which is very important. Now, this takes me to my next story. Seasonality. And if you know me on this channel, I do believe in seasons and seasonality. And oftentimes this time is not different, and there's always a pattern. First of all, I actually came across this chart after I'd started building the seasonality charts, but I thought it was a very simple little summary of where we are. Now, from the chart, you can see the best month for Bitcoin historically has always been November, and 2024 was no exception. The second best month for Bitcoin is October, average return about 19.46%. The third best month is what we are in now, ladies and gentlemen. Double digits, 13.62% average return. And the fourth best month is March. And then you can see the summer doldrums kick in, but July can be on fire too. But the point is, February is the third best month of the year. And by the way, we beat the return for January by up at about 8.6%, if I recall, higher than average. And basically as well, November 2024 was higher than average too. And that bodes very well for maybe we get some of what some people forecasted. And please, no groans in the audience, okay? PlanB does have dreams, and he shares data, and I respect him very much. But his dream scenario of monthly close towards the stock to flow target of around 500,000 didn't happen. He had some other predictions. 70K by October, bang, he nailed that. $100,000 by November, bang, he nailed that. December 150K, nope, missed. January 200K, nope, missed. But he still has Feb 150K on the cards. Now, I think it's not likely, but there's a big but here. And I'm going to go back to my seasonality and look at some numbers. So this is my monthly return chart. And so far, January was up 8.61%, which is higher than the average January. Well, the average January, including the 2011s, etc., is about 10.5%. But if you exclude those, it actually does better. So typically, people only go back 10 years to look at the averages. like go back to 2014, 2013. And if you do that, the return is not as good as it was in January of 8.6%. But what I want you to cast your eyes on, so what I've done is I've highlighted the year we are in now, 2025, in green on the left. Also corresponding years from previous bull runs. We are in the second year of the bull run. We're in typically the parabolic phase in 2025. And if we look back at history, just look where those, I circled those in red. So 2013, the Fed return was 63.6%. 2017, the return was 23.2%. A lot of people believe this cycle is very similar to the 2017 cycle. And 2021, 36.4%. Now, what will we get this month? Will we get double digits? A lot of people believe so. And when I look at the ETF data, there's always a lag between all this money coming in, all this buying, all the Bitcoin sucked in, and the actual Bitcoin price. Because, of course, market makers want to keep a lid on price. In fact, I saw the market makers fishing for a little Bitcoin today when they hunted down to a low 101,000. And that's just what they do. Now, the question is that I ask myself, we saw PlanB's 150K target here. How theoretically possible is that? Now, if I take this number of 36.4% from 2021, okay, and I multiply that by the $102,000 price, DBF, thank you so much, 102,000 by 1.364, we get about 139,000. No, it's not 150K, but if things kick off in Feb, we could definitely see a new all-time high, which means north of 109,000 and change, 110K plus, and then off to the races. We don't know if that's going to happen, but theoretically, 140K possible in Feb. It is if history repeats. Now, more conservatively, considering the analog of 2017, be more like 23.2%, which will take us to about 125K, which would still be absolutely awesome. So either way, February, if history repeats, will be a very good month. Now, there's also some interesting stuff happening behind the scenes. I love this chart from BTC Charts. We have now had 27 days with the Bitcoin price between, or just say north of 100,000 to $1 million. We'll talk more about $1 million in a minute too. $1 million. But that's pretty incredible. Now, when I look at this chart, I look at the amount of time spent between $100 and $1,000, 1,356 days. We look at the time between 1,000 and 10,000, 1,115 days. We look at the time between 10,000 and 100,000, 1,788 days. And we could expect maybe, this is the $1 million question, literally, how many thousand days will we be at this level before we break into the next level, which is the price north of $1 million. So looking at this chart and analyzing the trend, we have about 2,000 days, which is about 6 years from now to get to $1 million. Who can wait 6 years? That'll take us to 2030, 2031. And the answer is probably we all can. Actually, 6 years take us to 2030. $1 million Bitcoin. And that is crazy. Now, we had some history too, which is fascinating to see. We have a new first ever Bitcoin close above $100,000. Woohoo, party. And again, this is from PlanB. And the closing price of 102,412 is a new monthly close record. And that is history, which is interesting. And there's more. Let's look at Bitcoin compared to all the other cryptos out there. Bitcoin is leading the charge, completely leading the way. And you can see here from River, black is all other cryptocurrencies, which includes ETH, which has brought this average down a lot because it's lost a lot of dominance. Tosteven, thank you. But the decoupling of Bitcoin and crypto markets is something to behold. It has never run away so fast before. Maybe 2018, it did get a bit of a jump on the rest of crypto, but I hear you all ask, when AltSeason? We'll get back to that in a little while. But before, we have to wrap up the Bitcoin story, because a lot of people are interested, what do these tariffs mean for Bitcoin? We'll get to that. But first of all, 50,000 Bitcoin sucked in January. Monstrous from HODL 15 Capital. Very, very large amount of buys versus the amount mined. And remember, the miners are hodling for the most part. But we have another very interesting thing happening behind the scenes. This is the game theory state-by-state horse race. And if you look at this chart here, it has now the 19 states, all at different levels of where they are in the process of making Bitcoin a part of their strategic reserve. But without any doubt, America is embracing Bitcoin state by state. This reminds me of the little horse race. You got two horses in the winning leagues right now. You've got Arizona and Utah, where they now have House Senate approval pending, where they design and then it's signed into law, which is a natural step. But that House Senate approval remains to be seen. But they are the ones furthest along. And they see the importance of being first. They understand if you're not first, you're last. So this horse race is on, and it's going to be super interesting. And all of a sudden, imagine you've got 5 states that have allocated to Bitcoin. How will the other 45 feel? The answer is very much left out in the cold, and then they're going to jump in as well. And then there's going to be no Bitcoin left. That's my theory. And remember, this is just the US. But remember also that some of the states in the US are huge. Like California is the 5th biggest country in the world. Massive GDP. Florida, massive. Texas, massive. New York, massive. So they're all very, very large countries unto themselves as well. Now, another view of another horse race. We like faster horses and horse races. MicroStrategy versus IBIT, again from Huddle 15 Capital. You can see here the amount of buys since the November 11th, 2024, which is less than 90 days away. MicroStrategy bought 218,887 Bitcoin, and will they do another buy announced on Monday? The answer is probably yes, unless they were in the quiet period. But I know for a fact, looking at the charts, they did ATM on Monday and Tuesday this week. Now you've got IBIT. They've purchased 148,549. These two players alone have bought nearly 400,000 Bitcoin, which is insane, absolutely insane. And they are not slowing down. If anything, they're going to accelerate, especially MicroStrategy. That's a given. And then you have all these other horses coming to, again, pinch me. If you asked me in 2017, could we have this type of situation in the year 2025? I'd say, no way, impossible. That's a dream. You're mad. And here we are. But we have another tailwind. If I couldn't paint a more perfect tapestry for you all, and I hope you appreciate it, is this. M2 is ripping higher. Ladies and gentlemen, I'm talking about money for years. But the M2 money supply just jumped 3.9% year over year in December to $21.5 trillion, the highest level since August 2022, which was C19 time, where they printed a truckload, and now we are back. And this marks the 9th consecutive increase after 19 months of declines. QE is here, ladies and gentlemen. Even though the Jerome Powells of the world and the Fed, etc., they pretend they're being very hawkish, but in reality, the money printing is there. And since October 2023, the amount of dollars in circulation has risen by $900 billion. And the money supply is just $190 billion short of a new all-time high. And of course, your melting ice cube is in a perpetual bear market. By the way, shout out to TKL, the Kobasi letter for this chart, and Sanjay for getting it to me. This is beautiful. Do you know why? Because M2 is an afterburner. When F2 goes up, Bitcoin price goes up and floats all boats. That's just how it works. Your dollar debases, but assets, hard assets go up. So who's ready? Seatbelts, please. And I'm not the only one to see this too. Joe Burnett sees it as well. M2 set to break new all-time high since 2021. And remember patterns here, everybody. Seasonality patterns, they apply. Because as M2 breaks all new all-time high, there'll be infinite cash money chasing very few Bitcoin that are available for sale. And we all know what happens next. Literally everything is pointing to the most perfect setup. Okay? Now, if you think I'm wrong on any of these, let me know. Share with me some data that proves otherwise, because I don't see it, and I look for it every day to challenge my own theses. That's what I do. Now, aNUPL time from Axel, and I must have shared at least 118 aNUPL charts. I analyzed all my decks going back 4 years. But this is from Axel, which is really cool. And this is a key indicator that basically gives you an idea of how heated the market is. We use it in our top and bottom indicator as well. But Bitcoin is in a confident state. It means it's very strong, but it is nowhere near a euphoric state, which means the market is not overheated. Again, for a long time, we've got to get to much higher, 0.7, 0.8 before we start thinking we are overheated. And that is peak enthusiasm levels, and we're not there at all. So good news, everybody. We have a long way to go. Banana zone kicking in, M2 kicking in. We got horses chasing very scarce Bitcoin. Bitcoin's never been scarcer, by the way. It's never been harder. And that's where we are. And then we have, it's funny, I was talking about Hive mining yesterday or the day before, because all of a sudden they're blowing up their hash rate. And all of a sudden, why? What's going on with Hive? Well, a guy called Frank Holmes, I think he's the executive chairman of Hive Digital, which actually ranks number 2 on my miner model now, is a Bitcoin mining company. And by the way, I don't have any Hive bags. Just saying for the record, this is the time where you don't stack miners. You maybe start thinning the herd, as it were. But this company believes the path to $1 million Bitcoin is inevitable as adoption grows and new use cases emerge. And he also spoke about the magic of the Satoshi. Basically, when Bitcoin goes to $1 million, the price of a Satoshi is 1 cent, or they say 1 penny in places like the UK. Shout out to Sean Donnelly here. He'll know what a penny is. You got to go spend a penny, which I think means something else. But anyway, let's get back to the story and stay on track. The question is, when will we hit $1 million? They think very soon. My math tells me it's possible in 6 years. Can you wait 6 years? If we include 2025, 2026, 2027, 28, 29, 30, 2030, not too far away, especially with the way things are changing in the world. And money printing is increasing. So even though we get to $1 million US, I reckon in 5 years, that could be worth about $550K. So don't get too excited when you look at the real purchasing power of your dollar versus the nominal value. Very important to remember that too. Now, the question I've been hammered with. I was going to try and answer it yesterday, but didn't have all the information. And it's complicated. You know, tariffs are a very complicated macro thing. But we're going to talk now about the impact, because everybody's freaking out Friday. It's like, oh no, tariffs, they're going to kill Bitcoin. They're going to spin us into a bear market. What happens next? Well, let's talk about that. First chart is from Joe Consorti, who knows his stuff. And he said, Bitcoin dropped like a stone on news that 25% tariffs on Mexico and Canada were going to hit, and 10% tariffs in China go into effect tomorrow. Boom. Okay. This rattled not just Bitcoin, but all markets. Okay. Bitcoin's a risk on asset. So is the QQQ. Let's have a look at that. But the big thing that the market didn't like here is surprises, because the original plan was for tariffs to go into effect in March 2025, not tomorrow. Markets do not like surprises, and they got blindsided with their pants down, and they got very afraid, and that's why prices fell. But the question is why? Let's look at the correlation between risk assets, Bitcoin and the QQQ. Andy in Australia, thank you so much for coming. Good morning to you. It's Sunday morning for you. But here, remember, risk assets like QQQ, NASDAQ, 100 stocks, and Bitcoin are correlated to some extent. But if you look at the last 90 days, you'll see Bitcoin's up 49.53%, and the NASDAQ is flat. So when people talk about correlation, yeah, there's loose correlation, but there's one horse that's a lot faster, and that's Bitcoin. Of course, you could be in select stocks, like since the same 90-day period. If you're in Tesla, you also made 50%. That's just how it works. So again, that's why it's important to weed out the winners and not just hold on to indexes, I believe. That's just me. But let's talk about the tariff talk, all right? This is kind of, I'm trying to explain the theory behind it and why it's good and bad, and then we'll have some macro experts chime in as well. First of all, my view on this, again, my view, don't take it personal or whatever else, but the T tariffs are an economic strategy, and they are a way to protect domestic jobs, domestic manufacturing, etc., from foreign goods. especially when certain economies dump foreign goods cheap on the US market. And the US is a net importer of a lot of foreign goods. And the economists, sometimes, if you ask me, some think tariffs are good, some think they are bad. I had a lot of conversations with a lot of Canadians. They're saying, why are they doing this to us? Why? We're the best trading partners. We love each other. We share stuff. It's kind of like the net deficit is about $40 billion from what I remember between Canada and the US. So tariffs on Canada, I think, are a strategy. We'll talk more about the strategy of why, is to shake them into making certain decisions. We'll get back to that in a second. But the other thing is, alternatives to tariffs, such as tax reforms that encourage investment, propose more effective means to boost U.S. competition. What I mean by this, if you tariff products from the outside, you encourage manufacturers to come in and make stuff on the inside in the U.S., which in turn grows the economy, grows jobs, all that type of stuff, which is also very important. So tariffs, I think, are net bad, especially long term. There's no point robbing Peter to pay Paul. But short term, it can be quite a good weapon, especially if you're using it as a strategic lever to get the action you want. We'll talk more about that as well. But if you go back to Trump's book called The Art of a Deal, a lot of it is kind of shock value to shock people into thinking, oh my goodness, this is bad. And that puts you in a much better position of strength to negotiate the terms you actually want. So the question is, what happens? And what was the background reasoning behind this? There's a lot of really interesting stuff happening out there. Now, Preston Pish had a very interesting thought experiment. So basically, at least the way I interpret this, and Preston, if I got it wrong, let me know. But instead of taxing people domestically, you could generate an alternative tax revenue from tariffs on imports. So the U.S. government taxes about $2.6 trillion from personal income and about $3.4 trillion in goods that are imported. So his idea is to generate the same revenue as a personal income tax, tariffs would need to be set at an average rate of about 76% on all imported foreign goods, which is very high. But the impact on GDP, foreign imports constitute about 12% of US GDP, which isn't a large portion, relatively speaking. A lot of stuff is still made at home. A lot of GDP is created at home in the US. And by the way, this applies to all countries, whether you are Canada, Australia, UK, Europe, etc. But the consumer impact is what worries people. Implementing high tariffs could raise the prices for consumers by more than 20-25%. And this would particularly affect the 60% of Americans who pay less than 15% in federal income tax. The people that pay all the taxes, typically, I think the top 1% pay 50% of the taxes, and the top 10% pay over 90% of the taxes. So the bottom 90% only pay 10% of the taxes. So just to put things in perspective, that's very important to know here. But if tariffs penalize the people that don't pay any taxes today, instead of the rich paying all the taxes, they just pay 20%, 25% extra on imports. That's fine for them, but not fine for the people that have to pay 25% extra for goods. And that's the whole risk of this thing. But there's talk of maybe abolishing taxes and pivoting it to building a growth economy by bringing manufacturing and jobs here, by making foreign goods more expensive, which in turn brings about a whole bunch of retaliatory mechanisms which are net not good. Now, let's look at timelines here, and I think Mohammad Al-Arian put it very, very well. And again, I will try and interpret this. Everybody is talking about it, freaking out about tariffs and this guy called Trump screwing markets. In the past, he did cite things like drug smuggling, such as fentanyl, as one of the reasons for his tariff threat against Canada and Mexico, because he wanted action for them to close their borders. But again, I don't know much about how much drug or fentanyl is coming across the border. I know southern border a lot, Canada border, not too much, I don't think. But the threats are part of a clear, broader strategy that includes economic coercion to renegotiate trade deals like the USMCA. And again, if you read his book, The Art of the Deal, you start with shock and awe, and then you're in a better position to negotiate. That's his whole tactic, and it's what he's been doing his entire life. And now he's doing it with the US economy against other economies. Now, back to Mohammad here. Short-term advantage, because the US is stronger economically compared to many other countries, imposing tariffs might give the US some benefit right away. And this is because other countries might not be in a good position to fight back. And it takes time to change things. It takes time to change supply chains, takes time to find new customers, etc. And the question is whether these benefits will show up quickly or only after other countries try to resist. But short term, it's good for the US. It will not harm the economy. Now, long term, if the US keeps using tariffs over and over, it might not be good in the long run, because the more US relies on tariffs, the more other countries will want to become less dependent on the US economy, and they'll go elsewhere. And that means being carved out, being exclusive and isolated like North Korea doesn't help anybody. So that's my layman interpretation of this. I think the advisors advising the guy in office right now, they know what they're doing. I think short term, it's a good thing. Yes, there might be a little bit of short-term pain, but the end gain is to get what he wants from a negotiation point of view and then eliminate the tariffs. Okay? So it's a coercion mechanism to get some action. So everybody, don't freak out. It doesn't change things that much. And there's a lot of talk as well about Nvidia, tariffs, Jensen meeting at the White House. What does that mean? That's a net good for Nvidia. And what about tariffs impacting Tesla, importing goods? Well, Tesla is a genius at localizing supply chains. Everything they make in Giga Berlin is locally sourced. Everything they make in Shanghai is locally sourced. Everything they make in the US is locally sourced. Tesla's the most American-made company. So they're very clever about that. So they will be immune to this tariff stuff as well. So don't freak out about that. Sorry, that was a bit tricky topic, but I hope I summarized it and give you all some calm. And it took way longer than expected. But again, this is really tricky. Let's get back to crypto. When is AltSeason? I get this question all the time. People are holding their alt bags. And what's going to happen next? Well, this is a beautiful chart. Again, shout out to Sanjay, who got it to me. But if you look back at history, again, seasonality, January 2017 is when AltSeason kicked off. January 2021 is when AltSeason kicked off. And here we are at the bottom of the box in January 2025. And this is confluent with this chart here as well, everybody. Bitcoin is ripping away from the general crypto market cap. And that tells me what's going to happen next. Well, it appears that AltSeason should kick in 2025. Not sure exactly when, but the mothership is still going to run in Feb, in March, in April. If seasonality persists, crypto market cap will go nuts. And then, maybe, historically, people that were invested in Bitcoin would take some off the table and drop it into alts, and that'll pump those too. But there's other tailwinds happening as well that we have to be aware of that will help pump alts. And it's no secret, I'm heavily concentrated in two cryptos, pretty much it. And you know the names of those two things. Because I like very heavy concentrated bets in very few assets. That's been what's made me successful in my life. Now, one of them, not just Bitcoin, is the other one, Solana. It's sucking from other chains nearly $1 billion just over the past couple of weeks, which is crazy. A lot of it coming from Ethereum, etc. It's a huge amount of stable coins being produced, record number, in fact, nearly doubled in the space of a month. Nothing but goodness happening on the Sol chain. But the real catalyst is this, okay? Sol futures. That happened this week. This is from Eric Bolchunas. He said a Solana futures ETF, many of them could hit the market by mid-March. And this is amidst CME Group announcing Sol futures contracts set to go live on February 10th. Everybody, 10 days from now. Okay, this is the precursor to a spot ETF. It's coming. The odds of a Sol ETF happening in 2025 are over 90% right now. It's coming, and that could send us into this yellow box. So, you just need to be patient and stack. Stack. Things are a little bit volatile early on a Saturday morning, but that'll change over the weekend if history repeats. That's another big tailwind. Now let's talk about AI for a second, because AI is one of the most important narratives we've ever come across in our lifetime. maybe in the history of the world, actually probably in the history of the world. But you can see here that ChatGPT is struggling. They went from a 50% share amongst enterprise customers in 2023 to 34%. That's a big dip. Whereas Anthropic, which includes Claude, has gone from 12% to 24%, completely eating ChatGPT alive. That's why they're trying to raise another $40 billion to buy more compute to get better to compete, because they're no longer the best. And as I've said for many years, growth in Apple, etc., slowing down many years ago. And I said other players like Elon Musk's XAI will eat OpenAI alive. But before Elon Musk even does that, the other players are also coming. This is a quick illustration of the benchlight score. And you can see here, Claude 3.5 Sonnet absolutely crushes GPT-4.0. And that's why they are winning and they're growing very, very fast. Now, GPT, I think 5.0 is coming this weekend or yesterday. I'm not sure. I haven't checked it. I don't actually use it. But that's where we are on the AI races, which are crazy. Speaking of another player that's heavily invested in AI is Meta. They had their earnings this week too. Very impressive numbers, making over $8 a share. They expected it was 6.74. They made over $8. Revenue beat by about $2 billion as well. So all in all, very good. And that was a stock that I got into a very big position at $90, and I got out about, I think it was $300. And that's what you call selling too soon, which I did. But because I rotated into Tesla, it was kind of almost a wash. Anyway, sometimes you sell too soon, but that's okay. Don't go broke making profits. Now, my AI strategy is very simple. Shared it before, but I saw some very interesting chatter flying around X last night. And this is my attempt at AI art, so please excuse it, courtesy of Grok. I wanted to represent gold miners in the late 19th century in San Francisco, and everybody was looking to go mining for gold, for those of you who don't know the history. But very few were successful. However, the people that made a ton of money were the people selling the picks and shovels and the Levi's jeans. In fact, Levi Strauss is still a brand in San Francisco today, and they make denim jeans like this guy is wearing with his little pickaxe. And those pickaxes and denim jeans are made by the company in the backdrop there, Nvidia. And I have a Nvidia position, but my Tesla position is far, far larger. The question is, will it be the same this time? Is it going to be like the AI? Is it going to be like the gold rush of San Francisco way back in the late 19th century? Or is AI real? And that's the actually multi-trillion dollar question, to be honest. I do believe AI is extremely real. This isn't fake. This isn't people prospecting, digging into hills, looking for gold that doesn't exist. AI works. AI is radicalizing everything. It's changing everything. It's going to disrupt everything. And the pace at which it's changing is phenomenal as well. And all these players you see here are dropping tens of billions of dollars every month to get better and better and better. Okay? Nvidia will do very well with picks and shovels. But the first company that can truly nail AGI, which is Tesla, is where you make the most money. Not shilling Tesla here, but that guy in the front is going to change everything, and nobody is close. You hear all these things about, oh, China this, China that. Yeah, no. Not to have the optimal brain, not to have the supply chain locked up, not to have manufacturing at scale, not to have the machine that builds the machine, not to have the integrated supply chain, all that stuff. There's only one player that has that, and that is Tesla. So that's my AI play strategy. Forget the noise. Again, concentrated bets. I should have called this concentrated bets. Anyway, back to data centers too. Cool little stat here from Visual Capitalist. It shows you all the data centers in the world. There's 11,800 of them, half of them in the US, and a lot are being built as we speak in the US. And I was surprised. Germany only has 500, Britain 500, Netherlands 297, Spain 143, and Canada 336. Japan only 219, China 449. So the question is, where are all the NVIDIA processors going? The answer is USA and rest of the world. So it's funny. Another interesting thing is apparently the DeepSeek news that interrupted our weekend last weekend and made it very sleepless. Apparently, they have procured their H100s from Singapore. And Singapore doesn't even have data centers. Fascinating to see. Anyway, let's talk about some of the best insider traders in the world. Nancy Pelosi crushed it. I actually looked at Tempest AI and I am kicking myself for not buying, but she bought a truckload of calls expiring on the 16th of January 2026. And she's made over 200% on these calls in just 10 days. And Tempest is kind of like an AI play. And she made her entire salary in 3 times in literally a week. So well done to her. She's doing awesome. Crushing it. And other news too, again, this is, if you follow Tesla, you'll remember the Delaware story. And now you have lots of groups fleeing Delaware because of a lady called Kathleen McCormick, who believes Elon Musk, his 2018 pay package is not fair. It's too much. So let him work for 6 or 7 years and then revoke all his pay. Why not? Do we want governments telling enterprises how to make decisions? The answer is no, we do not. And as a result, everybody's fleeing Delaware. Here you can see Bill Ackman is leaving Delaware. We are incorporating our management company in Nevada for the same reason. Top law firms are recommending Nevada and Texas over Delaware. Also, Meta, which I just discussed, a massive company, are looking to exit Delaware and move to Texas. Shout out to the Texans watching and anybody in Nevada watching too. And Dropbox is also leaving for Texas, I think. I can't remember. But again, the exodus will happen. Meanwhile, I'm trying to finish every video now with a meme as kind of like a joke of the day to increase the mood and humor. Sometimes I finish on a down note. But Delaware is cool, from a great TV show, which I have one of the very few TV shows I've ever watched because I appreciate this history. But Delaware is waking up to the realization that businesses are incorporating in other states. This is what happens when you betray your audience, your customers, whatever else. Don't ever do that. So with that, everybody, that was a quick what happened this week. Crazy week, exciting week. And I hope you all made it and had fun. And thank you all for coming. I'll go back to work now on the Q&A for tomorrow, which will have some super interesting questions too. I look forward to it. Thank you, Sean Donnelly and T&D Tesla and everybody here, DBF and Andy in Australia and the whole gang. Thank you all for coming. Have a good night. I'll see you tomorrow. And if you're on the West Coast, watch for the rain. It's very wet out there. Now I completely lost my control panel. Whoops. Let me go find it so I can exit. Where is it? There it is. Thank you all. Have a good night.